Hello, thank you for listening in on the ground up single family development opportunity as real estate investors. And this presentation is for those interested in partnering in building homes in the ground up, specifically Pinal County and the city of Arizona City. My name is Des Losberg. I'm owner and founder of DL Realty Partners, and I'm excited to share this opportunity with you. Let's talk about Arizona housing. We are short housing units, 250,000 currently and growing even more now. Every 26 available rentals is only available for 100 low income households. So that's driving up demand for affordable housing. Specifically in Chandler, Gilbert, Tempe, the East Valley, and the Phoenix metropolitan area. A lot of families are getting pushed out due to the cost of living increase, and that's through the I-10 corridor down south, all the way down to Tucson. So cities like Maricopa, Casa Grande, Eloy, Arizona City have been growing. Here's the I-10 corridor. It's about an hour and 45-minute drive between Phoenix and Tucson. And the Arizona Department of Transportation is proposing a rail system between the two. So between 50,000 daily commuters, which has grown since 2009, it is a major hub and connection between the two cities. And Arizona City is right in the middle of that. They have major employers like Kohler, Lucid, Walmart, distribution factories, manufacturing factories, along with these other major companies. Arizona City is a great midpoint, and the need for affordable housing is growing because of all this employment opportunity. So the opportunity is to build affordable housing. And what makes Arizona City a great location to build is the ease of permitting, the lot acquisition cost, which is $15,000, $20,000, $30,000. And it gives you alternative exit opportunities because of the low barrier of entry. Arizona City is in the path of progress through that I-10 corridor. And I pulled the data, and there's 9,300 single family lots left. Of those, only 1,800 show undeveloped. But I've drove the entire city. I paid someone to map out the entire city, including utilities, and only a third are, and actually a third of those are already under permitting, construction, or being developed already. So that means there's only 1,000 to 1,200 units or lots left to develop. So the window is shrinking. Here's the Pinal County parcel map, the parcel viewer. And why Arizona City? How did I get started there? Well, I was in an investor networking group, and I ran into an investor. He was a full-time engineer, W-2, and he was doing this on the side. He shared with me his return on an investment and what he was doing out here. And I was impressed. So I went out, got a general contractor, and started my own ground up development projects. So this was my first build. It was in a cul-de-sac by the lake, 1,400 square foot, 3-bed, 2-bath. And what was impressive about it was the quality of construction. The general contractor went above and beyond. I was really impressed by his quality of work. So I was excited about the end project and the end product that we were providing. But when I went to go to sell, the numbers weren't quite what I was looking for. I was looking at a $26,000 net profit to expose for $236,000, which was about a 10% return approximately. And that wasn't the number I was trying to get to. So I switched over to a lease purchase option, and a lease purchase option allows me to set my price. There is a tremendous amount of demand for homeowners who cannot qualify for traditional financing. It was a 3-year purchase option. I charged an upfront purchase option fee and embedded my 4% appreciation annually for a sales price of $319,000. And the best part, I don't pay realtor commissions because I have my buyer built in. So my profit margin went from 10 to 30% and from 26,000 to 76,000. Here's the project. Final stages on the left, my marketing piece on the right for the lease purchase option, $295,000 purchase price for $1,600 a month in rent. And what happened was, it was a very high demand. I had 40 plus applications, requests for tours. There was so much demand for lease purchase options. People, whether they're undocumented, whether they're a cash business, whether they had a credit or a life event where they can't qualify, we're providing an opportunity for them to be able to buy. And what I did is I end up exiting some of the property by taking out a loan on it and getting most of my capital back. I left a little bit of money in, got 8%. The property cash flows positive 170 bucks a month. So it's only 4% return annually. But what's really exciting is I got a net profit of 76,000, a 30% return. But the unspoken benefits are the depreciation on my tax returns. I get to call myself a real estate professional, huge tax benefit by doing that. The property becomes 1031 eligible because it was placed in a service and I've held it for longer than 12 months. And I could refinance later if needed to get that cash flow up and get those rates down. The second case study is my favorite. 0.42 acres, 4-bedroom, 2-bath, 1,600 square foot. I end up throwing a 3-car garage on it and 10-foot ceilings, and I situated the house on the lot to take advantage of that full acreage. Here's the project. Like I said, very good quality of construction. I was there every step of the way. Very impressed with the end product. And on the left is the final. And we did tile throughout, updated quartz countertops, stainless steel appliances, LED recessed lighting, marketed accordingly, and it was a huge hit. Here's the drone photos showing the location on the golf course, the size of the lot, no side neighbor. It was a beautiful home. And the final numbers, we got our full asking price of $389. The only thing we had to give was a 3% seller concession for closing costs, but the net numbers still worked out. I counted for every dollar we spent and exposed to, and we didn't do financing on this one, but our net profit came out to $70,600 for a 22% return. Not too shabby. So I got excited and now I'm all in. I'm going into the affordable category because it is getting a little saturated on the 1,500 plus square foot. And I can't find a bunch of lots that are on the 13th tee box because there's just not that many lots that are duplicate. That was once a diamond in the rough. And so I'm getting standard lots and I'm looking at building affordable smaller homes, 3-bedroom, 2-baths. And here are some of the blueprints that I have submitted already. Those last two I'm going to be submitting next. Here are the numbers. If I finance them, I'm exposed for 44 to 60,000, depending on how much I want to finance. And the total cash basis ranges from 180 to 200,000 if I don't want to finance. The profit margins, of course, dwindle if I have holding costs. If I do all cash, they range anywhere from 34,000 up to 55,000, depending on if you use financing or not. And then if you do a lease purchase option, those numbers grow all the way to 60, 70,000. Between these 5 projects, we're looking at 200,000 in net profit if I finance, close to $250,000 if I don't, and over 330,000 if we do lease purchase options. Double-digit returns, 20% returns, 25% returns, all the way up to 28. But with good opportunity comes risks, of course, just like any other investment. There could be a real estate market decline. Permitting approval could decline. There could be increased competition in the affordable housing segment. Your capital's tied up. There could be construction, weather, labor delays, or the GC just doesn't perform. But there's risk mitigation to all of that. And that's why I love this business model and I love doing these builds. You're not deploying the full amount of the asset or the capital. On fix and flips, which I've done before, you're exposed for the full 400, 500, 600,000. You can pull the plug if you need it. You can have an alternate exit strategy because of your low barrier or low exposure. And I trust the GC wholeheartedly. He was very communicative. I appreciated his candor and he was straight up with me with everything from start to finish. And his product was second to none. He has a crew of 40 to 50 guys now. He's doing annual revenue of 12 million. He's growing. He's building in Payson, Tucson, all of Pinal County. And honestly, it's going to be a short time before he just stops doing these smaller builds and he's just going to be big time. So I believe he's got some bigger commercial builds going on now. So the window's shrinking and I'm hoping to build a long-term relationship with him as he grows and scales as well. So here is an alternative exit strategy. If you can't accomplish your first 2 options of selling or doing a lease purchase option, You could refinance out, leave a little bit of capital in there, cash flow it, break even. If you do a lease purchase option, it cash flows for a 6% return annually. Or if you leave a little bit more money into it, you can actually get a 5 to 7% return on a lease purchase option as well. But the point of all this is you ultimately want to sell, get your money back, or do a lease purchase option if you want a little blend of the two. But this is a great option if the numbers aren't what you're looking for and you just want to hold or maybe burr out or have the tax benefit, or you can just pause. And that's what's great about this model is you're not overly exposed. The best part is USDA 100% financing. Arizona City is still considered rural. And so buyers can get 100% financing, which opens up the door for a lot more buyers. Your only competition in the mid 200,000 section is the Century Complete builder, and they do not have a great product at all. We have a far superior product, and as you can see from the map, most of the homes are higher 200s to 300,000 for existing homes. So there's not much competition in that affordable housing segment. However, if you don't want any of that risk, you don't want the market fluctuations, you don't want any of those things that could come up, we do offer first lien note and trust deeds here at One Stop Lending. That's my company as well. We offer a 10% return paid monthly up to. We do charge 2% for the servicing because we originate, we package, we compliance, and we prepare the loan doc as well as service on the end, prepare tax documents for you as well. So if you want mailbox money as an investor, we offer that as well on these specific projects. So to be notified on any opportunities in the future, give me a call. Whether we partner on ground up building or on the note investing, we have options for you. Reach out to my cell phone, direct to me, or email me, or via social.